USDA was predicting a record corn crop before harvest began last year. So did that come to fruition? I'm Clinton Griffiths. Monday, USDA will release its first supply-demand report of the year by looking back on last year's numbers. AgDay's Michelle Rook joins me. And Michelle, what are your industry watchers telling you?
Well, Clinton, market analysts are certainly more aggressive with their yield cuts for both corn and soybeans versus the average trade guesses for the reports. Now, USDA will provide final production for row crops, but also the January WASDE, quarterly stocks, and winter wheat seedings projections. And so there is usually some sort of market surprise. The January USDA reports are the biggest of the season, and a great deal of the focus will be on final yields and production. For corn yield, the trade is expecting just a 2 bushel per acre cut to around 184 bushels. Some market analysts tell me the trade guesses, though, are too conservative.
On corn, I'm as low as 181, Michelle, and honestly, I wouldn't be shocked if it's below a 180. So my numbers are quite a bit below the average trade guesses, and we'll see come Monday. There were good yields out there, Michelle, but man, we planted almost 100 million acres of corn, and that means it's in fringe areas.
Other market analysts agree corn yields are under 184 bushels in the trade guesses.
I think if they went down to 182, 181, certainly below 182, I think would be a big bullish shock because I don't think there's many people out there that believe they will do that.
A 184 corn yield would put production at a record 16.6 billion bushels and ending stocks at just under 2 billion bushels. So corn yield cuts will need to be bigger than 2 bushels to get a market reaction because it's likely to be offset by lower feed and residual.
You've got a feed and residual number that's 600 million bushel larger than this point last year. So there's some demand baked in there that could potentially offset production cuts.
For soybeans, the average trade guess only lowers yield by 0.3 of a bushel to 52.7 bushels per acre. But again, WASDE thinks a bigger cut is warranted.
I felt like the hot, dry finish, and again, we combined beans that were a lot of 8 and 9% instead of 13%. We learned a year ago that does reduce the yield quite a bit.
The current yield cut puts production at 4.23 billion bushels and ending stocks at 294 million, nearly unchanged from December. Now that would require USDA to leave demand nearly unchanged, even though export sales are still nearly 30% behind last year. So is that realistic?
In the case of the exports, I don't know if we're deep enough into the season yet for them to come off of first base, so to speak. So hopefully they don't, because if they do, and they don't do much as far as a yield cut, that really could be kind of a bearish signal for the bean market.
USDA also releases quarterly stocks with estimates of 12.98 billion bushels on corn, up 905 million from last year. Soybeans at 3.3 billion, up 158 million, and wheat at 1.64 billion, up 64 million bushels. Winter wheat seedings are expected to be down 8 to 900,000 acres. I'm Michelle Rook reporting for AgDay.